What's going on, guys? It's the Bulls and the Bears here with a midweek update video for the wheel strategy. And I just got one thing to say. CPI is coming. That's right. The dreaded CPI, the Consumer Price Index, the reading of inflation is coming out Thursday morning at 8:30, so before the bell even rings. It's a wild event. Investors are waiting for it. Highly anticipated event. And if you're watching this, because I'm recording this so late, it probably already happened. You probably already know what's going on. If not, well, it's coming. And I'm a little worried about it because me personally, I am pessimistic. I am bearish overall. I don't think inflation is going to be tamed with the current approach. I do agree with raising rates, but I think we're doing it pretty slowly. I'm a believer in positive real rates. In fact, Powell even said we need positive real rates, and that means interest rates higher than the rate of inflation. If inflation's at 8% and we have rates at 3.5%, that's not going to do much. It might come down a little bit, just natural deflation as people can't afford the higher prices, they buy less, therefore demand comes down. But there's more to it than that, and I don't know how it's going to be. I don't think inflation as a whole is going to be really reined in yet, but we could get a better than expected reading nonetheless. If we do get a better than expected reading and inflation comes down, that means what the Fed's doing is working. That's going to give investors hope, and we would probably pop if if it meets expectations or is worse than expectations, or even slightly better than expectations, but like not by much. Then I think we sell off. This is a touchy subject. I think we're more likely to sell off than to rally unless we get a much better than expected reading. So I'm a little nervous there. We had a sell-off today. This is the daily chart of SPY. As I don't know, investors could be selling off, unloading some positions in anticipation of a drop. That way they can load into positions at better prices. Who knows? We are in a rising wedge. If you look at this as the overall downtrend or the pole of a potential flag, there's the bearish leg and then a rising wedge formation, which you would lead to believe it would break down and then sell off. But when will it break down? It's already at it right now. We sold off pretty hard into it. Go to the hourly chart. You can see we tested. We even broke below it a little bit, but came back up. We're pretty much there. Talking about pennies is just semantics. As of right now, I believe this is holding. It's not perfect, but it's there. But we're danger close. If we break below this, then it could be a bloodbath potentially to the lows. So that's the risk. And with the wheel strategy, we're short puts and we're long shares, and downwards movements hurt. So how are we looking today or this week? Well, you can look on the bottom banner on the positions I have open. I stuck to the game plan. I opened pretty much everything I said I was going to open in my weekly game plan video. And what's nice about TradingView, which is my charting platform, it's free. You can use it. I figured out that you can break up your watch list into sections. So I have Treasury yields up top and S&P 500 up top. But then I have the wheel watch, which are names that I'm watching for the wheel, but I'm not in, and then wheel positions. So that breaks up very nicely. If you didn't know, you could do that. You just go to these three dots on the top right of the settings and then click add section, and it breaks it up for you, which is nice. So I'm in a lot of positions. We will start with ZIM. Actually, no, we won't start there. We will start with Barrick Gold. So let's click on this. Barrick Gold had a really nice rally this week. We had a pop off the lows on Friday, which was a really nice close. I have a 1450 cash secured put at the 1450 strike. And I even wrote a little note next to the line. Sold two puts for 16 cents each, a net credit of 16 cents per contract, because I did roll this from last week. It ends up being a net credit of 16 cents per contract. It expires this week. And we had a really nice rally in gold. And, I really was hoping to get into this trade. I was really hoping to get shares at 14, but the timing wasn't there. And I feel like I'm missing the gold train. The gold train is leaving the station, I feel like. And I could just buy now, right? And hopefully we get a move up to like 20 if we get a serious rally, which I do think could happen. But I just won't feel comfortable unless I get shares down here around 14. So because I am playing it pretty conservatively. So, I may have missed it. We'll see what happens. But I actually closed this week. I closed it today. We had our big rally because CPI is coming out tomorrow, and we could get a massive drawdown in the market. So not only would that potentially put this position in jeopardy, but that's kind of a minor part. The main reason I close it is because I want to free up buying power in case I want to open a new position at those lower levels. Those lower levels, if we sell off, could provide a good opportunity to sell puts on something for next week and get a really good premium at a really good strike. So that's what I'm looking for. I want to unload a position, free up some buying power for a potentially new position after a potential drop in the market tomorrow. So that was the game plan. I sold it for 16 cents. I closed it for 3 cents. So it ended up being a $26 winner, or 81% of the total premium. So we'll get into the profits and stuff on Friday, but that is all set now. That's why it's not on the banner down below. So the other positions that are open include Bath and Body Works. This one stuck to the game plan, sold the 30 strike, sold 2 puts for 20 cents each. They expire this week. And I made a video showing most of these positions being opened on Monday. You guys seem to like that. I will try to make those more often. I was working from home that day, so it was easy to make that video. Usually I'm in the office on Mondays, so it won't be as easy to make a live video like that. But I'll see what I can do. But yeah, so I went into Bath and Body Works, and it was doing well until today. This is the daily chart. We had a nasty sell-off, down almost 8%, broke the lows of all this previous consolidation. So now we're in some dangerous territory. Luckily, we have a buffer, from those lows, that recent support, because we have like at least $1 of a buffer, and now we're entering into that buffer. We're at $30.90. The strike's $30. And if we do have a market sell-off tomorrow, this could be in jeopardy. We'll have to see what we can do. We could roll it down to a lower strike, where we have some support coming up down here, $27, $28. We'll see what happens. We also have Friday too. So even if we do sell off in the morning, we could rally Thursday afternoon and all day Friday, and everything looks nice. We'll have to see how it all plays out. But I'll be patient and diligent, and we'll see what happens. Diligent, is that the right word? Vigilant? I don't know what I was trying to say. But so that's going. Foot Locker is the other one. Now this one is in jeopardy. Same thing like Bath and Body Works, same type of chart structure. I sold a $30 strike, just like the last one, just like Bath and Body Works. I sold 1 put, not 2 this time. I only sold 1 for 20 cents, expires this week. And well, Foot Locker broke $30. It's at $29.92. Let's go to the 15-minute chart. This is Monday, Tuesday, and Wednesday, and we broke below 30, and we tried to reclaim it, and you can see $30 is acting as resistance on this 15-minute chart. So not looking great. This thing could easily just keep going down, especially with a negative CPI print. So CPI is going to dictate a lot of how all of this goes this week. We always have the ability to roll our positions down and out, give us some more time, give us a better strike. We might have to be implementing that strategy this week if CPI really does kill us. So we'll see. But yeah, Foot Locker is in the money as we speak. So very interesting stuff there. What else we got? Toll Brothers. I did not show this one on my live video because I just couldn't get the right fill. It moved up too much on Monday, so I couldn't get the fill. But it did end up coming down, and I sold the $40 strike. 1 put for 25 cents or $25, expires this week, and we have a good cushion. I mean, we still have $1.90 in between the strike and the current price. You can just see how much chart space there is. Not bad. And if we do get down there, it's holding up as some nice support looking back in the past. So even if you go way back here, September of 2020, it was support. So I'm feeling good about this one. Foot Locker's looking bleak. Bath and Body Works is looking all right, but still worried about that one. And then what else we got? DocuSign. Oof. This one was open from last week. I rolled it down and out to this week. It originally was a 44 strike. I rolled it down to 42.50. Expires this week. I have a net credit of 45 cents on it. And, well, we're below 40. We got 39.80 right now for a price. Yeah, not looking great. We were down here when? On Friday. We were down in the 30, just under $40 on Friday before we rallied. Now we're back there. And we actually kind of double bottomed right here. Friday low and then today's low. Pretty much the same exact level. So we double bottomed and we popped up. I mean, we're still close to that level, but we are still higher. So still a double bottom. Let's see if we can keep it that way and move up. But we're going to need a favorable CPI print for sure if there's any hope with DocuSign. Otherwise, this is going to crash pretty hard. I might be able to roll it down and out, but it's still going to be an in the money put. Maybe I'll get it down to like the 42 strike or the 41.50 strike. But if DocuSign's down to 38, it's not going to matter. I'm going to get assigned. But at least I can give myself a little more time for a chance for it to recover, or at the very least, just get a better cost basis on the inevitable assignment. So that's what's going on there. DocuSign is looking bad. But I do have this trend line down here that maybe we'll bounce off of, which we're getting close to. So if we do drop to like 38.50, maybe we bounce from there. We'll see. But I'm happy owning this name. If I can get a position near $40 per share, I'm honestly happy with that. So I just hope I'll be able to sell calls on it quickly. If I have to wait because it's too far underwater, that's going to stink. What else we got? I think that's, we'll do ZIM now. ZIM. So this one, I wasn't able to sell a put on it on Monday because I really wanted the 21 strike or the 22 strike, but mainly the 21. But either way, I wasn't able to sell on either because if I go to the 15-minute chart, we gapped up. This is Monday, right here, gapped up, ripped up. So the premium was not paying enough at those levels. So I was like, crap, I guess I'll have to wait. ZIM does like to sell off. So maybe we'll get one and then I'll be able to sell a put at that strike, the 22 or the 21. Didn't quite get it on Monday. Didn't get it on Tuesday. But we did get it today. ZIM really sold off pretty hard today. Down over 5%, almost 6%. And I was able to get the 22 strike sold today. Sold one put for 15 cents. 15 cents isn't a lot. Usually I get like at least 25 or 30 cents per contract. But that's usually on a Monday. I didn't sell this one until Wednesday, so half the week's gone when I sold it. So 15 cents really isn't all that bad, considering there's only half a week left. Plus, like it's still a 30% annualized return, even though it's 15 cents. So the fact that I still got the 30% annualized and it was halfway through the week, I think that's a win. We do have a bit of cushion, $1.17 of cushion before we get the 22 strike. If we do threaten it, I might roll it down or out, or I'll take assignment, honestly. I've been waiting to get an additional 100 shares to adjust this original cost basis way up here on my first 100 shares. I would love to get just 100 more, have 200 total, down around $29 per share as an average cost basis. Then I'll be able to really hammer the wheel and sell calls, even if it's monthly calls like I did with Intel. I would love to do that, but I can't do it until I get a full total position. What I did do before I even sold that put, back to the 15-minute chart, on this pop, the gap up and rip up, when we were up here, maybe not perfectly up there, probably a little lower, maybe like right here, I took this opportunity on ZIM, this pop, to sell a call. You want to sell calls on green days. That's the rule of thumb with the wheel. So I was able to sell a call on that pop at the 26 level. Let's go to the hourly chart and zoom out a little bit. So I was able to sell a call at 26, sold one call for 20 cents, expires this week. Now that's way underwater, way out of the money compared to where my cost basis is on the shares that I'm selling the call against. $10 to be exact. And well, if I got assigned there, it'd be $1,000 loss on the shares. So I don't want to get assigned there. But so I'm taking the risk that, I'm taking the chance that ZIM will not continue this rally that it just had on Monday, the gap up, the rip up. I'm taking a chance that it won't continue. There won't be follow through the $26 level and it close up there. I'm taking a chance that that won't happen. And history shows that's a pretty good bet to take because every time it pops, it drops. It's just stuck in this range right now. Like right here was another day that I was able to sell a nice covered call at the 30 strike because it had such a massive pop. I'm like, there's no way this thing is going to continue. It's already extended right now. It loves to sell off. It will not make it to 30. And sure enough, it sold off hard. And that ended up being I was able to sneak away some call premium and lower my cost basis. And that's what I'm trying to do here again this week. If I can get this call to expire worthless, I'll be able to adjust my shares by another 20 cents. So instead of a cost basis of $36.07, it'd be $35.87. So it'd be under $36. You get 20 cents closer to the current price. Little by little, we will adjust that cost basis. And once I have 200 shares, it'll be a lot easier to do so. So that's what I did. Right now, the covered call is looking very nice because I think there's hardly any chance that it's going to get assigned and my shares called away. But that's where we stand. We have quite a few positions still open, obviously. $130 worth of put premium on the table right now. Here is SPY. We are still in this descending wedge. Go to the 4-hour chart. I'm sorry, the ascending wedge. We just hit the bottom of the channel. Will we pop up? Will this wedge hold regardless of CPI? Probably not. It probably won't dictate CPI and where it's going to go. But if CPI does drop us and we're outside of this wedge, I think it's just going to force, it's basically going to force that technical pattern, that technical bearish pattern to say, all right, we're out of the wedge to the downside. It's time to retest the lows. That's how I see it going. I would love for it to stay in the wedge and make its way up to 400 or so, 390, 400 before selling off. I do think we will sell off, but we'll have to see. We'll need a positive print for that. And that just about does it. So thank you guys for watching. There's a lot on the table right now, and it's all going to be dependent on CPI. But in any case, we will manage our positions. We are playing with names that we like, that pay dividends, that are reliable, profitable companies, well-known companies at desired levels, honestly. So in the end, we'll be happy either way. So that's it. Thank you for watching. If you enjoyed, hit the like button, subscribe for more content. And as always, I'll see you all next time.